Tajudeen. Let's take a look at some of the activity on the Nigerian markets. It seems that investors have still stuck to their wait-and-see approach and not really entering this market on a very aggressive note. What are you making of the activity or lack of activity we're seeing on that front?
Yeah, thank you, Alishia. Basically, what we saw on the Nigerian stock market yesterday is more like a continuity of what happened on Friday. On Friday, we saw the market moving up slightly by 0.8%. So, I mean, on yesterday too, the trend continued. I mean, I believe it is basically because some investors are showing more interest in the market, even though quite a number of them have been going into the market at cautious prices. And that is why we had the banking sector, for example, appreciating by 0.04%. I mean, also we saw the brewery sector going up by 1%. This kind of appreciation were negated by the decline that we witnessed in the conglomerate sector, which declined by about 1%. So in all, I would say that even though investors are increasingly getting aware that prices are pretty low now, and these prices are supported by fundamental analysis, they are still going into the market at cautious prices. And so we are in the short term unlikely to see a strong upward movement of the index if investors are still coming in at pretty cautious prices.
Well, going on with that continuing theme from Friday, of course, we saw Union Bank out with full year numbers on Friday. Yesterday, the company releasing Q1 numbers, market reaction to those, where we saw profit after tax down 96.6% comparatively to the first quarter of last year.
Well, as for Union Bank, for example, the decline that we saw, in my own view, is not really a surprise. Because if you consider the fact that even the top line declined by 33%, and that, in my view, is basically because the banking sector as a whole is not really lending, and lending activity in that sector has really reduced. And so one will expect that interest income will be, the growth of interest income will be lower compared to previous years. And even the 3 billion PAT that we saw for Union Bank, I believe is as a result of the fact that the bank really worked on recovery of loans, and as well as also, being cautious in terms of lending. So the 3 billion we saw and the 96.6 billion decline in the PAT, I believe is basically because the bank had to make provision.
Well, of course, this has been one of the banks to have been bailed out by the Central Bank of Nigeria last year. Let's take a look at prospects for this company moving forward. To what extent is Union Bank dependent on, someone coming in and actually acquiring this bank to manage an effective turnaround?
Well, it is likely that we have investors that will show interest in acquiring the bank. And even though the bank has not really made available their plans on this, but I believe that we are likely to have investors, either local or foreign, that will show interest in the bank. And with that kind of acquisition, it is likely that the bank will be better positioned for future prospects and growth.
Well, let's take a look at some of the other counters to have caught attention in the food and consumer goods space. We've got Nestle really making headlines. Just let's take a look at Nestle, because we know that Stanbic IBTC does have a buy recommendation on the stock.
Well, as per Nestle Nigeria PLC, we can say that that is one of the strong companies in the consumer sectors in Nigeria, because basically the company reported a strong growth in top line last year for 2009, which was a growth of about 32%. That compared to the decline that some other consumer companies recorded in the corresponding year. And I believe that that is basically because of the interesting strategy that the company actually embarked on in terms of credit availability to customers to buy in bulk from the company. And what our view is we have factored in the fact that the company is going to expand its operation in the Maggi production line, and we have also factored in the cost-cutting approach the company has embarked on. And with this, we are expecting that cash flow in 2010 will be much impressive, and so we are expecting the company to be better positioned in 2011 going forward after the completion of the expansion that they are banking on right now. So we believe that the company still has about 13% upside potential.
Well, very quickly before we go, another company to look at within that space seems to be Dangote Flour. It rebounded with a 4.8% uptick in yesterday's session. What's driving some of the interest on that front?
Yeah, well, for Dangote Flour, I think investors are really keen on seeing the 2009 figures. Yeah, I mean, my discussion with the company indicated that the report is not actually ready right now, but we are expecting that in the next few months, the full year 2009 will be ready, and we are expecting about 10 billion profit after tax. That is compared to about a lower figure that they made in the previous year. So I think investors are showing interest in Dangote Flour basically because of the expectation of increased earnings and increased dividend as well.